Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh, and Snehi Shah will be also joining us shortly. But then over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep an eye on, and tell you what the brokerages are saying as well. But first things first, let me take a look at the US markets and let's take a look at what really is happening there, because when you take a look at stock futures, not much of a move coming in there because investors are still awaiting key corporate earnings as well as the beginning of the Federal Reserve's policy meeting as well. Now, when you take a look at futures, when you take a look at Dow Jones futures, you're looking at a dip of about 0.2%. S&P 500 futures slid nearly 0.3%. And when you take a look at Nasdaq 100 futures as well, you're looking at decline of about 0.4% there as well. Now, in extended trading, of course, there was CrowdStrike shares that fell more than 5%, and there were reports that Delta Airlines hired attorney David Boyce to seek damages from CrowdStrike as well as Microsoft after an outage this month that led to thousands of flights being cancelled. So that was something that the market was looking at, and there's of course a host of quarterly results that are on the deck. So the likes of Merck, Pfizer, PayPal, Procter & Gamble, or even a JetBlue before the bell, and after the bell, of course, you do have Microsoft, Advanced Micro Devices, as well as Starbucks after the closing bell. So those are the ones that we're keeping an eye on. Now, so far, more than 40% of the S&P 500 companies have reported their results, with 79% posting earnings that exceeded Wall Street estimates, which compares with a 5-year average earnings beat of 77%. So that's the kind of earnings picture that we're looking at. But of course, the important thing to watch out for is the Fed's two-day policy meeting that is set to begin on Tuesday, where Central Bank Chief Jerome Powell is also going to be signaling the timeline as well as the number of rate cuts expected in the next few months, and that is the important thing to watch out for. Any commentary coming out of that meeting is going to be very important. The Fed previously, of course, projected only one rate cut for the remainder of this year, and traders have been pricing in a 100% chance for a September rate reduction as well. So that is important to keep an eye on. On Tuesday, of course, traders will also be watching out for jobs opening data for the month of June, and economists polled by Dow Jones are also calling for 8.1 million job openings. Now, that is the same as in May, but consumer confidence for July is also slated for release. So a host of data sets, and we'll take you through what other cues you need to be looking out for, but a lot to look out for in terms of the US markets. Moving to Europe then quickly, European markets closed lower on Monday, reversing earlier gains, and investors were looking ahead to another busy week of earnings as well as central bank meetings there as well. When you take a look at DAX, you're looking at losses of about 0.5% coming in for DAX. And when you look at CAC 40, largely flat movement coming in there as well. So that largely is the handover coming in from both the US as well as the Wall Street. But Snehi, let's also take a look at the picture that we're seeing for oil as well as gold, right?
Well, absolutely, and lots is happening on the oil front especially. Hi there, good morning. Let's talk about what the world of oil and crude have done, and lots of geopolitical action building up on this front. You have US crude oil futures that have fallen nearly 2% yesterday as traders appeared unfazed by the risk of a widening war between Israel and the Iran-backed militia Hezbollah. A rocket fired from Lebanon killed 12 children in the Israel-occupied Golan Heights on Saturday. Israel has blamed Hezbollah for the attack. The militia has, however, denied any responsibility. Israel's security cabinet has authorized Prime Minister Benjamin Netanyahu's government to decide on how and when to respond to the rocket attack. So the world is actually anticipating a full-blown response coming in from Israel, and we'll just have to wait and watch how this pans out for the prices of securities. Like, you have WTI, you have Brent crude, and also gold will have to have a very important role to play over here once and if, God forbid, this blows out into an all-out war, because gold is considered to be a safe haven when securities like equities are considered to be risky on the back of all of these geopolitical tensions building up. Now, Middle East tensions pushed oil prices higher in the spring when Israel and Iran went nearly to war, remember, but the market's reaction to the event in the regions have been muted since then in an absence of an actual disruption of oil supplies. So that's as much as everything was happening with the world of crude and oil. Brent crude closed at 79.6, slightly under that $80 per barrel mark. So this is one factor to watch out on, 0.2% lower. And you also have oil that has WTI oil that is at 75.58 to 75.6, just holding on to that $75 per barrel mark is where you have WTI crude at close with a downtick of 0.3%. But while this was everything that was happening with the world of crude, Let's take a look at what gold prices have done yesterday. They retreated yesterday, pressured by an uptick in the dollar as investors look forward to the US Fed Reserve policy this week for any indication of an interest rate cut. Spot gold fell 0.1% to $2,832.4 per ounce. So, well, that's a roundup of everything that was happening with commodities like oil as well as gold, Shansi.
Well, absolutely, and there's really a lot to look out for, right, Snehi? So when you look at what you're going to be keeping on your radar from the US, of course, like I told you, there's consumer confidence data, there's JOLTS job openings, as well as the Fed's two-day policy meeting that begins. And we've talked about this previously, but from the Eurozone, there's also economic confidence data set, as well as GDP and consumer confidence data. So keep an eye on that as well. Now, in terms of global earnings, like I told you, after the bell, there's Microsoft and there's Procter & Gamble. Before the bell, AMD as well as L'Oreal reporting their numbers. So those would also remain in focus. But in terms of action back home, now in terms of corporate action back home, you do have the AGM for Manorama Industries, and it's the record date for Aurobindo Pharma share buyback as well. So keep an eye on that counter as well. You do have Indus Towers that has a board meeting to mull share buyback. So that one is going to remain in focus, and so will Varun Beverages on account of that board meet to mull stock split as well. Now, in terms of other cues to watch out for, you do have a host of counters that are mulling fundraising. They're both a mulling fundraise, and you do have South Indian Bank, Jindal Stainless, Spandana Spooty, as well as Lloyds Engineering Works. So all of those counters will remain in focus, and it's the last day to buy shares for 361 WAM, Castrol India, Varun Beverages, as well as Brigade Enterprises for some benefits. And in terms of primary market action there's of course Akins Drugs and Pharmaceuticals IPO that opens. So that one is going to be the one to keep an eye on as well. And in terms of other news, you do have Japan's unemployment data set coming out. So that will also remain in the spotlight, Snehi.
Absolutely. So let's get a move on then. Start talking about all the important global news and updates that are headed your way this morning, and a rather important week when it comes to central bank announcements. The two-day FOMC meeting all set to begin today. The central bank is largely expected to hold rates steady. However, all eyes will be on Jerome Powell for cues on further rate cuts by September. Important to note here, Fed officials have been acknowledging a declining trend in inflation as it edges closer to that 2% target. Meanwhile, the Bank of Japan is expected to raise its benchmark rates and trim down buying Japanese bonds. The quantum of both actions unclear. You also have Bank of England that will be in focus on the back of its policy stance this week. So watch out for all three major central bank announcements coming in.
Well, absolutely. And tech major Apple has also released its first developer betas of iOS 18.1, iPad OS 18.1, as well as Mac OS Sequoia 15.1, coupled with an early version of their highly anticipated Apple Intelligence features. This marks the first time developers can test Apple's foray into generative AI on their devices. Apple Intelligence is an important initiative for the company as well, mind you, and investors hope the tight integration of AI with Apple's operating system can spur a big wave of upgrades in the coming years. So definitely something to keep an eye on, Sneha.
Absolutely. Let's get a move on then and talk about earnings. Then McDonald's is in focus. They've reported a surprise drop in global comparable sales for the first time since 2020. Now remember, the burger giant has struggled to hold back budget-strapped customers for opting for cheaper meals at home. Sales declined 1% in the second quarter, the first one in 13 quarters, versus analyst estimates of a 0.5% rise. Remember, shares of the company have tanked 15% this year and fell 1.5% in pre-market.
Moving on then, Heineken shares declined after the brewing giant's first half profit growth came in weaker than analysts had expected. Beer sales, which were expected to grow at 3.4%, rose by just 2.1%. The Dutch company also recorded a net loss, which it attributed to its investment in China's CR Beer, which has suffered a share price decline as well. Operating profit as well showed organic growth of 12.5%, below the company's consensus forecast of 13.2%. So Snehi, no toast that they're raising at this point.
Absolutely. And you know what, on that note, we're going to switch focus, come back home then, and on your screen now is going to be a defining picture that we did see coming yesterday. FM Nirmala Sitharaman covering her face during Rahul Gandhi's speech. Now that picture symbolizes the divide in the ideology and the policy of the two biggest parties, BJP and Congress. Now Rahul Gandhi attacked the government in Lok Sabha, alleging that the government has backstabbed the middle class with this budget. Now the LOP also hurled charges of tax terrorism before accusing the government of working on behalf of the top industrialists. The BJP, on the other hand, fell back on its tried and tested trope, accusing Rahul Gandhi of insulting Brahma, Lakshmi and Saraswati's lotus. Listen into what he said.
अब इस बजट में आपने उसी मिडिल क्लास के एक छुरा पीठ में मारा, दूसरा छुरा छाती में, एक इधर मारा और एक इधर मारा। इंडेक्सेशन जो आपने कैंसिल की वो पीठ में छुरा था, और जो कैपिटल गेन्स टैक्स आपने बढ़ाया वो छाती में छुरा था। That this budget, the sole aim of this budget, इसकी जो नियत है, it is to strengthen this framework, the framework of big business, monopoly business.
Alright, then moving on, we also caught up with Kapil Madan, advocate Karan Verma, author and political analyst as well, and Sanjeev Srivastava, political commentator, as well as Suhail Seth, managing partner at Counselish India, to decode all of this. Listen into what they had to say then.
He had, talked about everything, but he has not spoken about the fact about, the taxes that have been, increased. Now, let me just give you an example. The first issue in this is about, removal of indexation benefit. Now, if you ask even a, student, who is just, studying accounts and tax, he would tell you how, lethal it could be. Now, let me just give you an example. A property that was worth maybe 50 lakhs in 2001. And if I bought that property in 2001, and if the property is now, worth about, 2 crores, I don't get the benefit of inflation. I will have to pay, if I sell the property on the entire amount of, 2 crores appreciation, or maybe 1.5 crore appreciation, I will have to pay taxes. Now, what is the logic behind it? The fact remains, let me give you another example. Majority of the middle class population in India, they invest in mutual funds. Now, you have increased the long-term capital, long-term tax if you earn from mutual fund. You've also increased the short-term gains that you make from your mutual funds investment. Now, the point is here. Now, what does the middle class gets in return? We just saw what happened in Delhi recently. Our roads are flooded. Our airports, roofs are collapsing. So, I mean, from the middle class point of view, I think, he is actually not working for himself. He is working for the government.
So you're saying that the kind of taxes, Kapil Madan, what you're saying is from the kind of taxes that the middle class is paying, the kind of infrastructure that they are getting is not adding up. But Sanjeev Srivastava, at this point in time, for the impact on the middle class to be played up to the extent it has, with references being made to the Mahabharat Chakravyu, what do you think is the strategy on the opposition side?
Gandhi is where I will not agree with my friend Suhail is that, I think he spoke with sufficient gravitas, and the leader of the house speaks with equal gravitas when he speaks. So this gravitas is a two-way street. So just because he has become a leader of the opposition doesn't mean that he has to appreciate the government. He has made some valid points. With some of whom I agree, some of which, and some of them I disagree. Like this middle class is a big misnomer. Even rich Indians consider themselves middle class in this country. Upper class also considers itself middle class. But the truth of the matter is, middle class really takes all the brunt because there is no way they can avoid paying tax.
All right, on that note, we'll slip into a very short break on this edition of Market Cafe. When we return, we'll take a look at what the Asian markets are doing and how they've opened up today. So you stay tuned. Hi there, welcome back. Let's take a look at what the Asian markets are doing as of now. Asia Pacific markets largely in the red as of now as the Bank of Japan kicks off its two-day monetary policy meeting. Now, when the meeting concludes tomorrow, the Bank of Japan is expected to raise its benchmark interest rate and trim its Japanese government bond purchases. Economists polled by Reuters expect the bank to increase its benchmark interest rate to 0.1%, up from the current range of 0 to 0.1%. On the back of that, Japan's Nikkei slid 0.7% on open, continues to be there, roughly 280-point cut coming in for Japan as well. Now, Japan's unemployment rate has also come in slightly lower than expected in July at 2.5% compared to the 2.6% forecast by a Reuters poll of economists. Shifting focus, let's talk about what South Korea is up to. Kospi was down almost 1% on open, and as of now also Kospi continues to be there, not much happening on that front. 1% lower is where Kospi is as of now as well. Let's shift focus, talk about what Australian markets are doing. ASX 200, which is Australia's index, dropped almost 1% on open, continues to be there. Not much momentum being seen, but right there you have ASX 200 almost 1% lower in trade as of now. Let's also talk about what Hong Kong is up to. Hang Seng Index lost 0.8% on open and has deepened those cuts because 1.2% cuts coming in on Hang Seng as well. The 200-point drop is what that index is seeing. Lastly, let's also take a look at what Shanghai is doing, and let's see if that is able to buck the trend in the Asian markets, but not much happening as well. It's in tandem with all of its Asian peers. 0.6% lower is where Shanghai is also as of now. Let's shift focus back home, talk about how we shut shop yesterday. Now, very interesting fact is we reached 24,999.75 but did not touch that 25,000 mark yesterday. We receded from those levels, closed at 24,836 on the Nifty spot. Implied open at 24,857, indicating a rather flattish start, not much penciled in today. And given that the global handover also looks shaky, it seems to be a tempered day in today's trade, but we'll just wait and watch to find out what today's trading session looks like.
Well, absolutely, and wait we will, because that sea of red is not really all that inspiring when it comes to the Asian markets, and the kind of handover that we're getting from Wall Street as well is quite mixed. But
hi there, welcome back. Now remember earlier when we spoke about crude on the show, I did say that it has fallen below that $80 per barrel for the first time, and this has happened since the 10th of June. So what is the reason behind crude's fall? Let's further understand what is leading to this dip. And my colleague Samit is joining us with all of those details this morning. Good morning, Samit. Take it away.
Well, if you look at Brent crude prices on an intraday basis, they have slipped below the $80 per barrel mark, which is the first time that we have seen since June 10, 2024. Now, in the month of July, in fact, if you see, crude prices are down nearly 8% for the entire month, and this is the biggest monthly drop that we have seen when it comes to Brent crude since October 2023. Now, what is the reason why we have seen this drop in crude oil prices? Well, there have been concerns on a demand coming in from China, which is the world's largest importer of oil, and hence we are seeing this kind of a drop when it comes to Brent crude prices. Now, this drop in crude prices will definitely benefit a host of companies in India. To start off with, in the oil and gas space, it will be beneficial for the oil marketing companies because a fall in crude oil prices do aid their marketing margins. Now, in the month of July, if you see so far, petrol margins have remained stable at around 7 rupees, but diesel margins have increased from 1.8 to nearly 4.7 rupees per litre, which is more than double of an increase that we have seen. And do remember that diesel is the most consuming fuel in the country. Now, with every 0.5 litre change in the fuel margins, it usually increases the EBITDA for Indian Oil Corporation, BPCL and HPCL anywhere between 7 to 11 odd %. For oil explorers like ONGC, Oil India, Vedanta and HOEC, it is kind of negative because oil is the main product, and with lower prices means lower realization, and generally a $5 per barrel drop in Brent crude prices would decrease the EPS for ONGC and Oil India by around 7 to 12 odd %. For aviation companies, it's positive because nearly 40% of their total cost is crude related. For lubricant manufacturers, it is positive. Nearly 50% of the raw material cost is crude related. For paint companies, nearly 40% of the raw material cost is crude related. For tire, cement and host of specialty companies, nearly 40 to 50% of the raw material prices are either directly or indirectly crude related, and because of this drop in crude prices, definitely the margins will see an uptake, obviously with a lag impact.
For that roundup coming in, so there you have it. Crude prices have been falling on account of China, the world's largest crude importers, demand concerns persisting. But let's move on then. iPhone maker Apple has been seeing demand resurgence across its non-handset categories, and its non-smartphone revenue projected to reach $1.3 billion by 2024. Sumita Karir is standing by with more details. Sumita?
Right. In fact, Apple is all set for a bumper year ahead, especially so far as its non-handset revenue is concerned. And this is according to a research that's been shared by Counterpoint Research. So the research paper says that this year, Apple is expected to clock a whopping $1.3 billion by the end of this year. And this will come from categories like MacBooks, iPads, smartwatches, and TWS earbuds. Now, this is expected to be a growth of 14% year on year. And what is aiding that push? Well, it is premiumization that is not being seen just in the phone category, but in the overall electronics category, as more and more people are asking for better quality products. In fact, Apple's Mac, for instance, is gaining prominence in the corporate sector as the company continues to strengthen its presence in this space. They have new products coming up, and then the enterprise segment is which is expected by Counterpoint Research, which is all set to grow by 14% in 2024 as the brand is looking at upgrading its portfolio with the integration of generative AI. But that aside, the upcoming focus on local manufacturing, the availability of lucrative deals, and of course, easy financing options are some of the reasons why Apple's growth in these categories will be supported. Now, let's look at segment-wise growth. Now, Counterpoint says that overall shipments of Apple Watch are anticipated to grow by 50% in CY 2024. Apple Mac shipments are projected to grow by 15%. iPad shipments are expected to rise by 2%, and AirPods shipments are expected to grow by a whopping 50% in CY 2024. But what's important to note in this story is that all of these categories are categories that have seen year-over-year decline, year-on-year decline. Smartwatches and TWS, for instance, have declined as much as over 50% in 2023. However, these are expected to reverse these numbers. Now, interestingly, this news comes in as reportedly Apple is looking at deepening its investments into the country, into India, and reportedly is also revisiting its plans to manufacture iPads in the country, given the government's push to attract more supply chains and, of course, to give more incentives to support manufacturing in the country.
All right, Samita, thanks for taking us through all of those details. But the components PLI policy is very much in the works, and that's the word coming in from METI Secretary S. Krishnan. Talking exclusively to ET Now, Krishnan spoke on Apple India manufacturing success and shared updates. Listen into this conversation that he had with ET Now's Samita Karir.
I think the budget this year focuses really on increasing employment. It focuses directly on employment. Different sectors are helped by the various employment-oriented programs that have been announced, and the electronics and the information technology sectors can also derive substantial benefit from the initiatives that have been announced. It would really work well for that sector.
And so speaking of exports, of course, the Commerce Ministry has set a target for itself. And of course, speaking of electronics, it is, the second highest in terms of, the items that were imported to, some of the Western geographies like the United States. But I want to understand from you on the kind of targets that you're looking at as far as boosting exports is concerned, and will the government then be coming up with any further measures in terms of, tariff rationalization, etc., to further give a boost to exports?
One of the key ways in which we do it is to actually build the component ecosystem here in India, and our component ecosystem needs to be good enough in a global value chain to be exported as components themselves. That's when we are truly competitive, to supply not just to Indian manufacturers, final manufacturers, but also to people across the world. If the value chain needs to continue to stay anchored in India and needs to continue to stay here, it has to become competitive, and for that, a significant proportion of the components also need to be made here. So which is why the goal is more or less to double the value addition that takes place in India from the current levels to about 35 to 40% of value addition.
So when we speak about manufacturing, we have to speak about Apple and the kind of investments that it's made in the country. Of course, opening its retail stores and deepening production as well. And now there are reports that it is likely looking at the production of iPads in the country as well. I want to understand, what does India really need to do to be able to double up on that front?
I think Apple's success in India basically reflects the China plus one reality in global geopolitics. I understand they have close to about 26, 27 manufacturing facilities across India. It generates employment for close to about 175,000 people already directly. and many more indirectly. So that has been a true success story in the past 3 to 4 years.
All right, then let's get a move on and take a look at the mega exclusive. Then Ola Electric is all charged up and poised for its D Street debut. Nikunj Dalmia, ET Now and ET Now Swadesh's editor-in-chief, caught up with Bhavish Agarwal, as well as the CMD, as well as Harish Abhin Chandani, the CFO at Ola Electric Mobility. Listen in to find out what they had to say about the big plans that they have for the company and the growth roadmap ahead of that IPO that will be open for subscription on August 2nd then.
We'll be announcing our Q1 results very soon. You will see operating leverage in the near future. And you've already seen operating leverage in our results in FY24, which are in the RHP. So you've seen EBITDA improve from -43 to -19% in just 1 year. And further, manufacturing, like we said, is an operating leverage business. As we are growing volumes, operating leverage keeps improving. So exact timeline is hard to put, but you see it happening as we speak.
You are an entrepreneur, and they say entrepreneur as smart as Bhavish Agarwal सस्ते में कुछ नहीं बेचता है.
देखो, entrepreneur दूर की भी सोचता है. And like I said, ये बहुत ही future driven, future में बहुत potential है इसका. And मैं चाह रहा हूँ कि सारे जो investing community है, उनको इसमें value दिखे. So entrepreneur, the foolish entrepreneurs end up optimizing for today. I hope the smart ones optimize for tomorrow.
So final question, Bhavish bhai. What about risk of change of technology, especially in the battery business? Innovation, billions of dollars are being spent there. From lithium to hydrogen, I don't know how the future would move, but there is a real threat of technology changing the way how energy storage business would move. How are you insulating yourself to ensure that the technology medium which you are betting on, that remains relevant?
Nikunj, there's a very important paradigm difference here. For too long, companies, especially in India, have been technology takers, not technology makers. And when you're a technology taker, the risk of technology change affects you much more. But when you're a technology maker, you actually create the technology of the future and you de-risk yourself. So our strategy has always been to be the technology maker of the future, not the technology taker of the future. And in that sense, that's the most simple strategic way of de-risking ourselves from technology change, by creating the capabilities, by doing the investments into R&D to be the technology maker of the future.
All right, that was the word coming in from the management of Ola Electric right before their IPO opens for subscription on the 2nd of August. But let's move on then. And PM Modi is all set to address a post-budget conference organized by the Confederation of Indian Industry in New Delhi. The conference will capture key reform measures for the next few years, including those outlined in the Union Budget, and collectively chart a path for Viksit Bharat. ET Now's Sumit Chaturvedi is joining us with all the details about this event. Sumit, take it away.
In a first such conference of its kind, PM Modi will address the captains of Indian industry at CI's conference, CI's post-budget conference, and the overall theme is Journey Towards Viksit Bharat. It is first such event because generally post-budget finance minister, she holds such kind of conferences, but this time for the first time PM Modi is himself coming and addressing the captains of the industry at Vigyan Bhavan. Over 1,000 participants will be there, including the members of CII, diplomats, other academicians and others from different walks of life. Last Saturday, PM also held a meeting with Niti Aayog officials. Well, overall, the ambitious plan of the government to make India a Viksit Bharat and touch 30 trillion economy mark by 2047, well, that is something which is top on the agenda of PM Modi. That will be on top of agenda of PM Modi as well. Also, he's going to discuss the budget questions, the budget, maybe the theme, what was there in budget, who was it intended. So overall, all these things will take place at Vigyan Bhavan. It's important in the light of India Inc. While having certain kind of objections to certain budget proposals where it happens, because the feedback is taken all the time. And so PM, the government, will try to, in a way, tell the India Inc. that this is for you, what is the mission of India is going to be. Apart from PM Modi, other ministers will also be there as well.
All right, thanks Sumit for that update coming in. So there you have it. All eyes will definitely be on that speech that PM Modi will be giving later today. But then it was a bright Q1 for Colgate. So let's take a look at their earnings. The company has seen rural recovery for the quarter gone by. And Vinny is standing by with all the number crunching. Vinny.
So Q1 has been a very, very strong performance for Colgate. A brightening performance is what we could call it. And what are the key highlights? Very strong performance, whether in toothbrush or toothpaste and the premium segment for the company. Other than that, they've witnessed recovery in rural is what the company highlighted. Rural growth is outpacing urban growth. So that's a very, very key highlight coming in for Colgate. Premium portfolio, that's also growing faster for the company. Now looking at the internals of the numbers for the company, this time around 13% growth in terms of revenue of the company. And mainly when you're looking at it, toothpaste saw double-digit growth led by a high single-digit volume growth. Toothbrush also saw a strong double-digit growth in terms of the top line for the company. Other than that, overall the margins of the company have seen an expansion of 240 basis points, 34% is what the margins have come in. And let's not forget, there was a lower base last year, so that is also something that is supporting the growth and performance of Colgate. But all in all, a good performance, strong growth in terms of versus the peers when you're comparing. That is HUL, which is reported its numbers. When you're looking at oral care business of HUL, that's seen a mid-single digit growth driven by pricing, while Colgate has managed to see a growth of double-digit sales growth, like I mentioned, in toothpaste, led by a high single-digit volume growth. So all in all, we're seeing upgrades coming in by analysts as well, and Nuvama has upgraded the new target price for overall Colgate when you look at it to 3,745 rupees per share from 3,305 rupees. Even Jefferies has upgraded the target price. Similarly, the trend coming in from JP Morgan, Investec, even Equirus as well as Goldman Sachs, all of them have upgraded the target price. So good performance coming in from Colgate.
Right, good performance coming in from Colgate, good quarter1 and brokerage upgrades also in. But Vinny, while you're with us, also talk to us about a Nifty FMCG major, right? You have Tata Consumer Products all set to come out with its quarter1 earnings today. Tell us what the street is expecting and what kind of quarter1 can we expect to see for this FMCG company?
So in terms of Tata Consumers, we're expecting a revenue growth of around 17% this time. Profits, a slight bit of a decline of 6%, and margins expected to come in at 15.1% versus 14.6%. So around a 60 basis point expansion, 50-60 basis point expansion in terms of the margins of the company. Now this is the EBITDA margin. Now overall, when you look at it, there was a harsher summer, so out-of-home consumption that could see an impact coming in. That's the beverage sides that could see an impact. But Nourishco, Sampann and Soulful are expected to post a very strong growth during this quarter. International tea business, that's supposed to post a softer growth on a like-to-like basis, while EBITDA growth is led by an uptick that we are seeing in terms of the margins, mainly by non-branded business for the company as well as the international business that's supposed to support the growth. Now, let's not forget the acquisitions of Capital Food and Organic India. We start seeing that revenues coming in, right? So what are the synergies there, or what is the growth for both these acquisitions? Keep an eye out on that, and any outlook that they're giving in on that front. What is it that they're seeing in terms of demand trends, raw material costs, and any pricing action that the company may be looking at? That's a key factor to watch out for, as well as the market share trends for tea and salt are key factors that we're keeping an eye out on.
Well, absolutely, Vinny, and a lot of key factors to keep an eye on when it comes to TCPL. But let's move on then. And Avenue Supermarts is the one that will be in focus on the back of its analyst meet that is scheduled for today at 11 a.m. So tell us what to watch out for there as well then.
So absolutely, we will be keeping an eye out on Avenue Supermart. They came out with their earnings, but what are we monitoring? Because general and apparel side of the business, that started seeing an improvement. Now, what is going to be the status on that? The apparel portfolio, the reconfiguration over there is a key factor to watch out for. Competitive intensity from peers, that's something we are watching out for. A lot of new players have come into place. So what is it that the value proportion that they will be offering, as well as in terms of the EBITDA margin that benefit from distribution of certain models? That's what we're keeping an eye out on. Likely the store addition in FY25, what's the number over there, and any clarity that we're watching out for in terms of omni-channel focus formats, that's the mini and max formats, are key factors that we'll be keeping an eye out on this time from Avenue Supermart's analyst meet today.
Alright, so we need lots of stocks to watch out for from the entire FMCG pack. Colgate to watch out for on the back of its quarter1 performance, Avenue Supermarts on the back of its analyst meet, and Tata Consumers on the back of its results today. But on that note, we'll slip into a very short break on this edition of Market Cafe. More stock-specific news and updates when we return on the other side.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at what the brokerages is saying bright and early this morning, and we have Gaurav who's joining us with that update.
Well, yes. First, let's begin with Finolex because we have got a downgrade for Finolex from Investec. They have downgraded the rating to hold and also hiked the target price to 345 rupees per share. What they believe is that supply chain constraints actually dampened the volumes for pipes and fittings in Q1. And apart from that, management has remained committed towards the volume growth that they have given and the targets that they have given. But they have cash, a lot of cash, which is creating a cash drag for the company. And on back of the valuations, they are actually downgrading the rating to hold. Next, let's talk about KC International because Nomura has now maintained buy rating but hiked the target price to 1030 rupees per share. What they believe is that we may see recovery in gross margins in Q3 FY25, and apart from that there are some contributing factors which will actually help the company to become profitable in coming days as well. Next, let's talk about BEL because UBS has now downgraded the rating to neutral but hiking the target price to 340 rupees per share. What they believe is that there are some positive factors but they are already factored in, and that leaves a little room for positive surprise for the company coming ahead. And apart from that, management is confident about the order run that they are building in. They are actually being a little constructive, but here they have actually downgraded the rating to neutral. But at the same time, we are getting Jefferies who have maintained buy rating but increased the target price to 370 rupees per share because what they believe is that company has a robust order book which of 76,000 crore rupees, and export of orders can actually surprise for the company from here on. Apart from that, lastly, let's also watch out for MCX because UBS has now maintained buy rating but hike the target price to 5,000 rupees per share. What they believe is that Q1 was actually strong and Q2 would be stronger than what we have seen in Q1, and healthy uptick in option ADV can actually become a positive catalyst for the stock in coming days. So definitely watching out on all these stocks on the back of the brokerage notes that we have received today.
Absolutely, Gaurav. Thanks so much for summing that up for us. All the stocks to watch out for on the back of brokerage notes. But Ria is also standing by with a list of more stocks to watch out for either on the back of their earnings or individual news updates. So Ria, good morning. Take it away.
Yes, good morning. Let's take a look at the stocks in focus today. We have a lot of companies reporting their Q1 FY25 earnings. First up is Data Patterns reporting a very strong set of numbers. They've seen good year-on-year growth in the revenue and net profit numbers, and the EBITDA has gone up over 33% over the previous year. And they've also seen a margin expansion of around 480 basis points, coming in at 35.8% in this quarter. Pfizer has also reported quite a strong set of earnings, good growth in the year-on-year growth in the revenue numbers, and also an uptick of approximately 60% each in the net profit and EBITDA numbers each, and the EBITDA margin has also seen an expansion of more than 1,000 basis points on a year-on-year basis at 31.5% in this quarter. Kalpataru Projects, on the other hand, has reported quite a weak set of numbers. While the revenue did go up a little on a year-on-year basis, they saw almost a 20% decline in the net profit numbers and a marginal decline in the EBITDA numbers as well. And they've also seen a decline of around 77 basis points on the margin front as well. Idea Forge has also reported quite a weak set of numbers. They've witnessed a decline on all three fronts in revenue, net profit and EBITDA numbers, and the net profit and EBITDA has gone down around 90% compared to Q1 of last year. The EBITDA margin also saw quite a significant decline of over 2,661 basis points, coming in at 2.7% in this quarter versus 29.3% in Q1 of last year. Let's move on though to Sona BLW Precision Forgings. The company has received two certifications for two products for electric two-wheelers under the Auto PLI scheme from the Ministry of Heavy Industries today. And lastly, we have two order wins coming in. First up is RVNL, which has emerged as the lowest bidder for the development of distribution infrastructure at the central zone of Himachal Pradesh for a total order value of Rs 739 crores. And lastly, we have ITD Cementation, which has secured a contract for constructing a residential colony in New Delhi worth approximately Rs 1,237 crores.
Thanks, Ria, for that update coming in. So there you have it. Those are the stocks that you should keep an eye on account of their earnings, order wins, and more updates coming in. But let's take a look at an exclusive interaction then with the MD and CEO of Kotak Mahindra AMC, Nilesh Shah, who talks about India's sovereign ratings as well as rating agencies in a case for India's ratings upgrade. Listen to what he had to say then.
In rupee rating, government has unlimited ability to print money and hence it is always AAA. If we are looking at dollar rating, then we have to look at what is India's net FX debt and what is its net FX reserves. If I take out NRIs who generally roll over their deposit, then for many years India's net FX reserves is more than its net FX debt. How can rating agencies give a country whose cash on balance sheet is more than its debt a speculative grade rating or just above speculative grade rating. But be the case as it may be, they say our name is Moody and we have poor standards, so we have to deal with them. Now, we will be probably one of the few major economies in the world who will have such a lower primary deficit of about 1.5%. And more importantly, this primary deficit will become probably primary surplus over next 3-4 years. How many countries in the world who have primary surplus, who have more FX reserves than their FX debt? Undoubtedly, rating agencies will be considering our upgradation.
Alright, that's the word coming in from Nilesh Shah of Kotak Mahindra AMC. But on that note, we'll wrap it up on this edition of Market Cafe from Shreyansi, me and the entire team that put this show together. Thank you so much for watching. But as we bid you goodbye, you stay tuned to the channel because the market takes all the action forward.